What's happening, guys? Welcome back to another Sunday scan. Hope that everyone had a great week and weekend. As always, a ton of volatility in the market, and it's really been a very good market if you are an intraday trader, picking your spots. If you're being disciplined, there's a lot going on. But like we always talk about, you really just have to adapt to the current market cycle because, again, if you're fighting, a current trend in the market, if you're trying to hang on to things for longer than you should, if you're expecting, these big rallies, but they end up getting stuffed, you just have to take a temperature check of the market. And there's a couple things that I really want to go over in scan today. Later on, Judah's going to join us, and he's going to share a bunch of watches that he has, on his radar for the upcoming week. And like we've talked about, with market corrections or during these times, you tend to have a certain type of action, and there's ways to play that action as it unfolds. So with the market correction, you usually have some kind of fundamental reason, a narrative shift, something that takes the air out of some of the market. And so you have that initial flush down, and the market's not really prepared for that at first. And so what happens is that as people are leaving equities in general, as you see those outflows, they start adding puts, they start adding hedges, and you have a very clean downtrend. And that's kind of like the first leg of the correction that we saw. And then you get into kind of the second part where you have these, rallies back or these swipes back. And what tends to happen during those types of, market rallies back up is that you have VIX compression or vol compression, which I'll get into a little bit of that later on. And then you have a lot of these sectors that are oversold. People got too bearish on, they bounce back, they clear out that positioning, and then you usually have a reset. And then it's about what happens next. Do we have that next leg down? Does the narrative change? Do the fundamentals change? It's just kind of keeping a temperature on that, part of the market cycle, and then looking for themes and names to play within that. And so, for instance, if you're in that first leg of a market correction, you're looking for the names like the CVNAs. What is, kind of forgotten about? It's up way too much, and it has those big clean fades down. And then once you're in more of the choppy part of the market correction, where vol is coming off, and by vol I mean like implied volatility, and so as like the VIX compresses, and that can give equities a little bit of a lift as some of those puts and hedges come off. You look for the names that maybe have catalysts, so maybe things like the quantum stocks that had an external catalyst to the market. They had a big run up into that, and then they kind of have their own life cycle within a broader market cycle. So sometimes it's worth focusing on the market cycle as a whole, and then paying attention to the big names like the Nvidias, the Palantirs, things like that are kind of trending step in step with the market. And sometimes when the market's a little bit more choppy, or when it's consolidating or finding its next leg, you look for things like microcosms within that market. So like the quantum names, or anything else that kind of has its own set of variables that is not directly correlated with the market. And so the quantum names were something that I want to touch on because that was really, I think, the most in play theme of the previous week. It's what we had on watch a lot from last Sunday scan. And I think it's just a great example of how to find, clean setups, clean opportunities within a market that is still, trying to find its footing in many different ways as you have sector rotations and things like that unfolding. So basically, the story with the quantum stocks is that you had a panel discussion that was scheduled for March 20th with some of the Nvidia executives, and you basically had all the quantum, or a lot of the main quantum companies on stage or on a panel, and then you had Nvidia CEO, and they're just kind of talking about where quantum is. And the CEO of Nvidia was like, I was kind of surprised that my comments a couple months ago hurt the quantum stocks. He's like, I didn't even really know that there were publicly traded quantum stocks. And so the event did not really go how I think a lot of the quantum companies wanted it to go. It was more of like, you guys should really be pivoting your business and reframing it, because the way that it's kind of currently laid out, it's not a very sustainable or even actionable market theme. And so lots of volatility, the big run up into that, and then just a very clean unwind. And I traded QBTS on that big unwind after that. And so I'll review some charts and things with that. And then I think there's another catalyst coming up over the next week for QBTS. So that will be on watch for some of that action. But so the first thing that I'm going to do is I'm going to pull up, the SPY chart and just walk through what I mean by like the first leg of the correction, the swipe backs, kind of like the possibly, quote unquote bear market rallies. It doesn't have to necessarily be in a bear market. It's just kind of when markets are volatile, waiting for headlines. So this is kind of the action I was talking about. You have that first leg where the market is complacent in some way. You had the Mag 7 names really leading, and then you have a narrative change. So you have tariff stuff going on. You have interviews with the new Treasury secretary and the trade department, and they're talking about big changes that could be coming. And so that can take the air out of the market. And then when the market's not really prepared for that, that's when you can have those really nice clean moves down. So that's like the first leg of a market correction. And then you get to a point where you have these, either bounces along the way, it clears out positioning, and that's kind of the phase that we've been in for the last 2 weeks or so. You really had some nice swipes back, but you can see they keep getting stuffed around these levels, and it's more like rallies that are an opportunity for the big money to continue to kind of deleverage from, get out, and then you kind of see what happens next. So I wanted to compare the action with this to the VIX, and the VIX it's not a perfect correlation, like it's not a perfect inverse correlation, but it's just a rough estimate of where is the vol profile. And so if you pull up VIX, basically you can see the inverse correlation on a larger time frame, where as the market was selling off, VIX was rallying, and that just means implied volatility, or how much volatility the market is expecting. It really rises, especially during that first leg down. And then you kind of get into a situation where if there's no new news or anything, then the VIX naturally mean reverts towards a more neutral level as that plays out. And so you can see as the VIX has kind of melted, as implied volatility, and really what matters is it's more like day-to-day implied volatility in the market, but there's not a great like market measure for that. So I'm using VIX as a rough proxy. I know that there are a lot of shortcomings associated with that. So you can see as the VIX melts, and you can see the action as the VIX is melting, SPY is kind of getting a little bit of a lift. It's clearing out some of that positioning. And then what tends to happen in more, market correction type of behavior is that as this mean reverts back to more neutral levels, it kind of resets positioning, and then the market becomes vulnerable again to another volatility spike if the headlines or the fundamentals or whatever the key driving variables of that market come back into play. And so, for instance, we have the April 2nd, tariff considerations coming up, and maybe they'll put on tariffs on a whole bunch of countries and everything like that. And so maybe the VIX melts a little bit more, and then we kind of get closer to that phase, and implied volatility spikes up again, and then maybe we have another leg down in SPY. So that's just kind of a concept that I wanted to talk about a little bit. And again, the VIX is not a perfect proxy for that. It's really like, what is the day-to-day implied volatility? What's the put positioning? How hedged are markets for these upcoming moves? And so I think that's kind of where SPY is right now. Had its first leg down, had a big clear out move, vol melted a lot, and now as it gets to more neutral places, we can see if the market gets vulnerable again to another market flush, or if the narrative changes or they delay tariffs or something like that, and then in which case maybe we just kind of keep drifting up into more of a neutral range where we had a correction, but now it's just kind of chopping, looking for the next thing. So that was really a big thing that I want to touch on. And then I also want to review some of the QBTS action. So I'll pull that up, and that was really the quantum move, where you can see as this was running up into that event, very clean move up again. The quantum names were hyped up into that panel discussion. You can see the volume increasing, probably some funds positioning in, or someone, who knows that these stocks have a lot of volatility that they want to participate in. They're kind of jumping in there, and then the event actually happens. You can see consolidating, and you can just see a big failed follow through there. And then, you get these very clean unwinds as you have that narrative change. And so that was a great day to participate in on, the short side or with puts. Puts is how I actually played this name. So there was just a lot of opportunity within that. So again, within a broader market that is kind of choppy or consolidating or figuring out which leg it wants to go to, finding these microcosms are a great place to find edge in the market. And so that was just something that I wanted to touch on. And then before I get into the main watches for the week, I will give the disclaimer that I am not a financial advisor, neither is Judah, and these are not buy or sell recommendations. Everything that we talk about is for informational and educational purposes only. So I'll bring on Judah. I'll let him go through his main watches first, and then I'll go over some of mine.
Thank you, Chris, for having me on. Starting off with the larger cap name, Palantir. It's really the first one that I see that's starting to reverse. It's reclaiming the moving averages and breaking out of this range. So I want to keep an eye out for that 90, 91 build and continuation. If the markets do want to give a little bit of a pushback into these keys, then I could see Palantir making its way back up a little bit. And then as for smaller cap names, TMC. This is a minerals and metals company, and given how what NAC did on Friday, as well as the LITM gap, we're getting some action in these type of names. So TMC is starting to tighten up. I want to keep an eye on that break through this 185, 190 level. Then we got the CTM, which is just tightening up. Had a massive move back in December, and now we're just building this big range here. I want to see that 130 just break up through, and either volume comes in or we get some sort of PR, something to give it that strength and action. But this is just one that's been consolidating now for a few months, and it's really tightening up. And then Tiger earnings was out on the 18th on Tuesday. We got a decent push, and then along with the other China names, we got some pullback across the board. But now we're starting to tighten up. We're near the 10, and the volume is drying up a little bit. We have this 2-day pullback, decreasing volume, or I should say 3-day pullback on decreasing volume. And now I want to see that trend line break for a continuation back into the upside. But the watch list isn't so big going into the week. I don't see that many great setups. I was looking at ORGO, which had earnings out back here on this huge push, and now we're just tightening up and building this huge range. So um, maybe this could be another one that could potentially be on watch. And yeah, I mean that's pretty much what I got for this week.
Okay, great. Thank you, Judah. And now I'll go over a couple of my main watches. So you can see, kind of the trend has been some outflows from the U.S. markets, and there was money that was already flowing into China, and then there was money flowing into places like Germany or some places in Europe. And so I think that we might be at a turning point in the cycle a little bit, where you can see that China's been holding up pretty well overall, just kind of consolidating within a nice trend. But I think we're at a key juncture now where, as we come up with the April 2nd tariff headlines, I think that there's going to be a little bit more uncertainty with the China names. Again, you have to take into account the fundamental, the news, the narrative, and the technicals. At least that's how I kind of frame setups. And so if you can see that again, like that first leg, that clean leg where Trump was much easier on China than people were expecting, and China, was already making some policy changes and some money was starting to flow back in. So that was like that first leg there. And now you have this kind of consolidation, possibly some distribution where it's like the early money's already in there. Now it's just consolidating, and now it needs to pick a direction based on what happens next. And so I think we're at a key juncture where, if there's no negative news, if China continues to trend, I think we're in like a normalized situation. Maybe this is towards the bottom end of the range, and it can continue to kind of chug up until it eventually has a nice breakout. But I think that if there's any kind of doubt or any kind of narrative change where it's like, okay, Trump is now changing his tone with the reciprocal tariffs or with something like that, I think that these names have a lot of people who are kind of crowded in here now, and it could be vulnerable to a flush back to some other levels. I'm not saying it's going to happen, but again, it's recognizing a setup, looking at the technicals and saying, if this were to happen, if the narrative change were to happen, then what would I look for if there's any kind of negative Chinese headlines? And so BABA and FUTU are two that are on my radar in case that situation plays out. I'm not saying it is going to play out. I'm saying that if we do get any negative China headlines, I think that these could be the more vulnerable names compared to something like PDD, which is exhibiting some more relative strength. So I would be looking for the names that have been consolidating in a range, and if the bottom edge of that range starts to break, then that would be a signal that we could have a nice downside move in some of the China stocks. But again, it's more just preparing for a narrative change. Root, we talked about this one last week, again, exhibiting a lot of relative strength in this market. So if someone's more of like a swing trader or someone's looking for, more clean moves, especially during market corrections, you're looking for the names that are still pushing against the highs as that's unfolding until they get overextended or until there's a piece of news, and then you can set up for a nice mean reversion trade. And so the next one, again, kind of in that basket, DTE, energy names. Ariel talks a lot about these. What is money flowing into, and given some of the policy and the fundamental aspects, you can definitely find some good energy names that are trending. They're near highs, and especially during a weak market, that's a great sign to see for relative strength. PLTR, this is on watch. So this one's, had that big clean move down. Now it's been consolidating, kind of like this is what we're talking about with the China names, where you have that first leg, whatever direction, up or down. Then you kind of have this indecision in here as it gets distributed and as it kind of just finds its footing. And now you see, what's happening next. If, let's say the market gets a little bit bullish and they delay tariffs, then this could have a nice move, a breakout, and then, head a little bit higher. But if the tariffs are on as scheduled and the market gets weak again, if vol spikes again, the SPY sells off, then Palantir has been a great name to just play, daily range. You get $3, $4, $5 of range almost every day on it. So just finding a key level, a spot to risk against, with equity, or if you're playing with options, then you can just find and pick your spots and then not look for massive moves, but usually just trying to find, capture that daily range and then keep your risk really controlled. And that's how, like Nick Nkaz in IU, he's been, absolutely crushing this market while a lot of people are more struggling. I mean, he is like doing crazy percent gainers, in this type of market using those strategies, just finding those pockets where, he really finds edge. QBTS is going to be on watch for me. Again, they have some kind of catalyst in the upcoming week. And so I'm hoping for some kind of swipe back up, maybe to 10, and then, run into that supply, fail to follow through, and then have its next leg down. And the other quantum names will be on watch as well. And then LAZR. So this one had earnings gapped up on that. So hoping that we get higher, the better, and then kind of have a failed follow through. And again, it depends on the market. If we have a more, bearish market or a more heavy market, I think that this will be met with supply, and likely, some speculative money flows in, and then they use it as an opportunity to kind of cash out there. But, again, nothing to fight. You just want to wait for those times where it gets overextended, it gets crowded, people get all bowled up on it, and then it stops going up, even though it technically should based on the narrative. And then those are the good mean reversion trades that end up happening. They come back to where they started. But again, like names like LAZR, SOUN, like, we've seen these names that kind of go on these runs for a while. And so if it's not acting how you expect it to, then that's not something that you can fight or, stay, wrong on. You have to adjust your bias and your theme for what is happening in the market. So those are the main ones that I want to talk about for Scan this week. We have a new Trader's Journey episode out. Anthony did a panel discussion with myself, Stan, Nick, and Ariel in New Hampshire last month, and we talked about the concept of edge erosion, and it's a fascinating topic. And I feel like it's very relevant in this market where a lot of people are, maybe more struggling, or they might be a little bit less certain than they have been in other market regimes. And so, you talk about the idea of, is there edge erosion? Like, did all these setups that people know just like go away? Did they vanish? Did they not exist anymore? It's like, no, of course that's not the case. It's basically recognizing what part of the market cycle that we're in, and then being able to adapt and recognize that an example of what you have been doing, you might need to change how you go about that. So it's not like breakouts don't work anymore or anything like that, but you have to find the pockets and the names that are responding well to that. So possibly like energy names, or things like PDD, or some of these other names that are exhibiting some relative strength. And then on the short side, it's like, okay, if you have these crazy moves, these super thin moves in names like RGC or something like that, it's like, it's not that, short selling small caps doesn't work anymore, but we're in a different part of the market cycle where some of these really thin names are running up, not because you have a huge influx of demand from speculative money, but more because there's few names that are actually moving up. And so they get extra short crowded, and the higher they go, the better they look as a short. And so it's just a perpetual cycle until some of the big holders, dump their shares, and then you have that big flush back down. So it's a great conversation to have. So definitely check out that conversation that we posted on the IU YouTube channel. And so before I wrap up, again, big thank you to Judah. And we'll see what next week brings. A lot of the action has been very day to day. And so you can have a couple of names on watch. You can have some rough game plans, but you really just have to see what is working in this market. And a lot of breaking news trades, market trending names like Nvidia, Palantir, just moving with the market and the flushes. Nate has had a ton of success doing that over the last couple of weeks, using those strategies and really getting a good read on stuff. So yeah, just being open to whatever the market brings, having some rough ideas in mind, and then just narrowing in and developing your game plan, your edge, and your trading setup as those things unfold. So that's all I have for this week, everyone, and I will see you in IU. Make sure that you like, subscribe, and share this, and also leave comments if you want me to talk about anything on Scan. If there's any guests you want me to bring on, leave comments, share your thoughts, and we will respond to them and incorporate them into Scan the best that we can. So I'll see everyone in IU in the upcoming week. Take care. Thank you everyone for watching. If you want to trade live alongside me and other members of the Investors Underground community, then check out investorsunderground.com to see if becoming a member is the right decision for you. They have some of the best technology and a lot of great members there, all looking to help other people improve their trading. And also check out Investors Underground content on YouTube and Twitter. Thank you.